Hello, good evening, everyone. This is Lucid FX speaking. So, today I'm gonna be analyzing gold USD. So, let's analyze gold. So, what am I seeing on gold? First, I have to map out the lowest low. The lowest low of this time frame. Then map out the highest high. That's the highest high. Then check the height of current price, which is this, right? So what structure is this? Then I'll check what structure is this, right? So it's not yet an uptrend, it could be a sideways trend because of there is no higher high yet. Higher high maybe to this level, so there is no higher high there yet. Right, so what do I do at this point? You can see how the market has been moving impulsively, correctively, then impulsively, then another correction, another impulse, sorry, then correction for reversals, then impulse, correction, impulse, correction, impulse, correction, impulse, and impulse, correction, impulse, correction. But this correction is a pullback, right? So if I switch to the lower time frame, let me see what that correction has to give. Let me see what that correction has to give on the H4. So as you can see on the H4, that correction is a pullback, right? A pullback to this zone, to this liquidity zone right here. A pullback to this liquidity zone right here. Understand? So, and this pullback came impulsively, right? Impulsively, look, impulsively, but couldn't get a correction to push towards the downside, so it kept going up. It kept going up, so reached this highest high, right? Reversed from that high, so yeah, reversed from that high. Why? Okay, as you can see, market came to test this efficiency, right? This efficiency right here. You can see this efficiency. So tapped into the efficiency dropped, dropped. So after that impulse, I'm expecting, all right, okay, dropped. So there is there are two market phases: impulsive phase and corrective phase, which leads to another impulsive phase, right? So let us check right here. What pattern do we see here? Do we see any pattern? Of course, we know price has been moving impulsively, correctively, then impulsively gave a pullback, then correctively. So from what I am seeing, right, this could, okay, not could, this is a reversal. Let's go down to the lower time frame. Of course, there are patterns here, as you can see. I'm seeing a wedge here, right? I'm seeing a wedge pattern right here, but price broke that wedge, or you could call it a channel, or if you make it to look like a channel to show that price did not even reach. Understand? You could take it from here, and you could take it from here. Sorry, excuse me. Right, so this is a wedge, right? Good. A wedge pattern, and a wedge pattern shows continuation. So if there is this movement, then there is this huge correction, right? Means that probably there is going to be another movement to the downside, impulse, correction, impulse, right? And then again, this correction came as a continuation, right? So look, sorry, on the daily, right, there has been this impulsive move from here to the downside, and then corrective move, right? Impulsive move, corrective move, then a very, very large weak rejection from this candle, very huge weak rejection from this candle, from this particular candlestick right here. So you can see the weak rejection, right? So what confirmations do we have? We have this level, we have this liquidity level. Price went back to take the balance, the efficiency, right? So and rejected immediately. Then we have, what's our market nature? Our market nature is a corrective nature because of this impulse correction, right? Correction, then expecting an impulse to the downside. So what else do we need? We've confirmed the liquidity area. Then on the 4 hours, so to get our entry now, what do we need to do to get our entry? To get our entry, we need to go down to a lower time frame, right? We need to go down to a lower time frame, something like, yeah, so something like the M30. So on M30, what are you seeing? Market nature, right? This was the impulsive leg, then corrective nature, and what else should you be looking for? Another impulse to the downside, right? Impulse, correction, impulse to complete the market nature. So After this correction, we should be looking for an impulse to the downside. This is the impulsive leg. This is the impulsive leg. Yeah. Sorry. And this is a corrective phase, right? This is impulsive leg and this is a corrective phase, and we should be looking for moves to the downside. Maybe price can still trickle to the upside, maybe to this point, maybe trickle to this point before dropping, right? But you understand? Or price could drop from this point, this exact point. Let's go down to the lower time frame. So what do we see on the lower time frame? I see a triangle pattern, right? Broken. A triangle pattern broken below. So when market opens, I'm going to short this pair, right? I'm going to go short on XAUUSD. Sorry, excuse me. With my humble stop loss above my stop loss above, I might take profit just this previous low. Understand? Because it could hit this low, go back up, right? Go back up to before shooting down. So right guys, all right, but I will be selling gold when market opens. I'll be selling gold when market opens. With TP, take profit above and stop loss below. So down to M5. Let's see what's really happening on the M5. Right, let's adjust our chart pattern. Right, we have a very nice stop loss above, just about 20 pip stop loss, and then my my 50 pip take profit, right? So here we go, right? Here we go. So as you can see, I'm looking at this very good confirmation, impulse, correction, right? Correction. Just take a look at this little beautiful correction for a continuation to the downside with look, this is a flag pattern, right? With this tweezers top candlestick. So my confirmation is clear for this short. I'm going to sell this immediately market opens. I'm going to sell gold immediately market opens. I'm going to sell gold, right? I'm going to sell gold immediately price starts moving. immediately market opens, I'm going to sell gold with my stop loss above. Not like, okay, not immediately, but by 1 a.m. or by, okay, by 11 p.m. Sorry, rather 11 p.m. when spread shots, like, gets tight. Spread increases by 10 p.m. So just to grab liquidity. Or when it gets a bit tight, it gets tighter by 1 a.m. but it's still wide by 11 p.m. but not to be left. In order not to be left out, I'm going to hop on this trade, right? So this is Lucid, your mentor, signing out.